Hello, good afternoon, everyone. Welcome to this live session today. Hopefully, some of you will manage some time to join this session. Welcome. So, this is a live portfolio update that we are planning, and many of you in the community wanted me to arrange one of these live portfolio update sessions, and that's what we are trying to do today. Let me know if you can hear me well. And then what I'm planning to do is that I already do the invest engine portfolio updates as video, but today I'm planning to share my Lightyear portfolio update, which is my individual stocks portfolio that I started only this year sometime in July. So it's a quite fairly a new portfolio that I started. So today I'm trying to do some screen share of the portfolio that I'll try to do today. I mean, this is the first time I'm doing a screen share on a live, vertical live session. So bear with me if things don't work out as good as they should. Okay, so I can see the chat. So in case you want to raise any questions, have any doubts, put them in the chat box. So I'll try to answer them as I go along. Please do keep this session interactive. I don't want to keep talking, though you can't talk, unlike a Zoom session, but use the chat box. I want to see what are your thoughts. And I have a computer screen just next to my phone, so I'll be looking away. So don't worry, I'm actually looking for any comments or any questions in the chat box. Imagine bringing your side. Okay. Right, so I'll share my screen. Just a bit of background about the way I invest. So I am predominantly a fund ETF kind of investor. So I don't do individual stock investing, I only started this portfolio, as I said, in July. The reason for this is I completed my ISA portfolio back in May, um, and I mean, I don't have any allowance left, so anything I invest will be in the GIA. So I don't want to invest a lot of money. So that was the whole idea of starting this stock portfolio. And slowly, slowly, I have built up a position there. I don't want this to be my main portfolio. The main portfolio will remain the invest engine portfolio. That will be the main core portfolio. So what I'm planning is I will keep a small portion, maybe around maximum around 5 to 10% of the entire portfolio will be in individual stocks. 90% will remain in the ETF and index fund. uh, so I'm learning this. I'm not a very experienced stock person, so I don't invest in stock. So I'm learning and I'm sharing things as I go along, so that in case you are also starting out, you can, I mean, learn from my mistakes and my experience. uh, Now, the way I do this is I have done Invest Engine doesn't have individual stocks, so that's where my main ISA portfolio lies. So it doesn't have individual stocks, so I choose a different one. So Lightyear app is a fairly a new app, but it's quite easy to use, and it gives you almost all the features like trading 212. So nothing much to differentiate. The fees are low. I mean, there are no fees in buying and selling. Only thing you pay is the foreign exchange fee, because the US stocks you buy them in dollars. So there is some foreign exchange fee that you pay, similar to trading 212. So there is not much to differentiate in terms of the fees. The stocks, you get all the main US stocks. There are some Indian stocks available as well. Very selected stocks, but if you want to buy ICICI Bank, HDFC Bank, so few of Indian stocks are available to buy on this platform. Of course, if you want to buy the mid caps and funds, you can do that, but only few blue chip Indian funds are available on the invest engine, sorry, on the Lightyear app. So something that if you want, if you're interested, you can look into that. But apart from that, there is not much to differentiate between trading 212 and Lightyear. Whichever you have, you get all the US stocks in there. ETFs are also available, but because I do ETF on Invest Engine, I'll keep them separate. This is exclusively a stock portfolio. So now I'm going to share my portfolio. Okay, so since July, this is what I started investing. Um, as you can see, top right corner, uh, so it's a GIA, it's a general investment account. So everything, all the gains I made, all the profits is going to be taxable. So I don't get any tax benefit on this. And it's all subject to capital gains tax. The capital gains allowance is again not a lot. It might change in the future. So I'll try to keep my profits below the capital gains allowance so that I don't have to pay any tax on this. A lot of people follow this strategy called BED and ISA, which means that the day before the financial year end, that is 5th of April, you sell all the stocks, and then next day when you have a new ISA allowance, you go back and you buy the same stocks within your ISA. I mean, Lightyear does offer ISA, so if if this is what I want to do, I've not decided yet, but if this is my plan to do, what I'll do is around 5th of April 2026, I will sell all the stocks, and then next day, as soon as the new financial year starts, new ISA allowance comes in, I will just buy the same stocks in the portfolio. I mean, this is how people do better than ISA. I'll decide closer to time. Either I will just keep them, carry them on, but I'm going to book some profits so that I don't have to pay capital gains tax actually. So I'll stay within the capital gains allowance limit, and whatever I have profit I want to book, maybe partially I'll book in, and then take the money and put them in the ISA for the next tax year. So I'll decide closer to time. Okay, so as of now, I have done around 5,000, 5,500 pound in this portfolio. I am still carrying on my SIP investment regularly. So I don't have a lot of money left after the SIP. So most of the money goes to the SIP. So it's not that I put in a lot of money in this. So a little bit of money every month. And that's what I do. I don't have a regular investment plan, but you can do that in case you want to do similar to trading to one two. You have to set up a monthly uh, payment going out from your bank. So standing instruction from your current account to this account, and then the money will come every month. It doesn't, unlike Invest Engine where it is very simple. You just do it from the app. You go to the uh, your banking app and you just link it. This apps trading to one to Lightyear, they don't have that kind of a feature, but it's quite easy. You just have to go to your bank account, set up a standing instruction with a particular reference number, and it will come to your account every month if that's what you want to do. So I've invested around 5,500 pounds since July. The portfolio, I mean, I don't say that I've done something marvelous, but it's up 13%. But as you know, last 6 months, everything you are touching is going up. So I'm just riding the wave here. So nothing fancy that I have done. And the things that I'm buying, I'm trying to complement them with my ETF portfolio, because my ETF is mainly NASDAQ. I have dividend portfolio there. So I don't want to buy a dividend paying stocks in the stocks portfolio because I already have a lot of dividend portfolio ETF there. So all the defensive stocks are already in my portfolio. Then I have NASDAQ. But the thing is, if you have to buy something and if you want to make money, then the only thing that you can buy is your tech stock. So if you are building any portfolio, you have to go and buy some of the Magnificent Seven, because without them, like, how else are you going to make money? I mean, that's where all the euphoria is. That's where the momentum is. So you end up buying those things again in this portfolio. That's what I have done. So 13% over like 4 months, which is okay. I mean, it's still a double figure return. So if I can carry on this performance till April, I get like 14, 15%, which is good enough. Like, at least I am beating the S&P 500, and that's the whole idea. Um, my my dream is to beat Nasdaq if I can do that. But even if I can't do that, if I'm able to beat S&P 500, I'm more than happy with that. Now the constituents of this, now this portfolio is very much fluid. I am actively monitoring it, and I'm changing things. So unlike my ISA portfolio, which I hardly sell anything, I keep buying, but here I do, I mean, make a lot of active decisions. So top of the screen, as you can see, my one of my biggest position was Alphabet, Google, and that's where I put in a lot of money. Well, a bit of disclaimer: none of these stocks are recommendation. Past performance is not a predictor of future performance, and today I have a portfolio, but as I said, there's a very fluid portfolio. I do change my mind. I do sell things. Buying and selling doesn't cost money on this platform. So if I feel that whatever I have bought, I feel that my investment hypothesis change, I will go and sell it. So just because I'm showing this today doesn't mean I'm going to stick with it. And please, like any investment, please do your own research, do your due diligence before investing your money. And none of this I'm going to share today is a recommendation from my side. Okay, so Alphabet is my biggest position. I don't buy every month, but I around July time, there was a very bad sentiment about Google. Google stock went down a bit. People were saying that Google search is dead. ChatGPT is going to take over all the search, and it's sort of very bad sentiment. And that's the time I put in, and I went in around 900, 800, 900 pound, and Alphabet has given a fantastic run up over the last 1 month specifically. So that money has, my biggest position has gone up 53%. So the advantage is that where your most of your money is, if that gives a good run up, your portfolio goes positive. And that's the whole idea. Like all the stocks that I'm buying will not be winners. I will lose money in some of them, but overall, as long as the portfolio is winning, that's all matters to me. So it doesn't matter, I don't have to win and make 50% return in every stock, but as long as the portfolio is in green, is beating S&P 500, that's the whole idea. So Alphabet, my biggest position, 53% since July. I'm not buying at the moment, but I mean, it's okay. Like my total portfolio, if I had one, almost 20% of my portfolio is Alphabet. So it's already a lot of position in my portfolio. I don't want to increase this at the moment. Next is Amazon. Amazon, well, this went up basically on Thursday, Friday. That's when Amazon gave a massive run up. Amazon, as you know, the sentiment about Amazon, out of all the Magnificent Seven, Amazon is actually not having that kind of euphoria at the moment, and they're investing massive amount of money in their AI infrastructure. So that's why I went in and bought Amazon, which is the second biggest position in my portfolio. I just bought it within last 2 weeks, so Amazon was not my old purchase. So got 13% out of that. Mercado Libre or Meli. So this is one of the position I'm buying because so I am holding Nasdaq in my ETF. So Meli is like a Latin American company, Argentinian. So it's not part of your Nasdaq, not part of my dividend. So Meli is a company which I want to own, but it's not in my ETF portfolio because it's not Nasdaq, it's not dividend developed market, it's not gold, it's not semiconductor, so I don't hold it in my ETF portfolio. So that was the whole idea, that I'll go and buy the individual stocks because I want to use this stock portfolio as a complement to my ETF portfolio. So that's why I don't have too much tech here, like, because I have Nasdaq already as a like 30% position in my portfolio, so no point. But Google was an opportunity, I got that, got the money. Amazon I thought was an opportunity, I got the money, that's fine. But I don't want to buy Magnificent Seven as a whole in this portfolio. But if there is an opportunity comes, I will do that. So Meli was one of the opportunity which is outside the ETF portfolio things, and I want to build this one up because Meli, anyone who follows the emerging markets have done excellent this year, and there is a very high chance that Mercado Libre is going to participate in a big rally over the next 5 to 10 years. So Novo Nordisk, now this position is down, but any stock commentator or expert will tell you that Novo Nordisk, like fundamentally, is a very good company. They got license for the oral anti GLP ones now. So Novo Nordisk, chances are that there will be a turnaround. So things might look better. So I'm going to add position. So I didn't buy it at a lump sum. So I'm going to adding like 200 to 50 pound every few months. So Novo Nordisk has gone down now. So probably build more position on that. So Thermofit, now I already have a healthcare portfolio ETF in my ISA portfolio. So I don't want to buy a lot of healthcare. By end up buying a lot of healthcare because they are one of the good opportunities at this moment, because tech stocks have already given a run up. Healthcare is one of the undervalued area. So that's why you can see a lot of healthcare stocks in this portfolio. So Thermo Fisher Scientific, this is a clinical trial and mainly clinical trial related company, and they have lots of other biotech function as well. So Thermo Fisher I bought, it has gone up 22%. Now the reason I know Thermo Fisher is I do clinical trials, and they have a unit in UK called PPD. And anyone who knows the business of clinical trial will tell you this is a massive cash flow rich company. Like the amount of money they throw away in things, you can't believe. They have so much money that they have no idea how to spend it. And Thermo Fisher is a international giant. Like any trial, any big pharma, when they want to run trial, eventually this will be some form of subsidiary of Thermo Fisher who will run the trial, particularly the developed countries, US, UK, Europe, is all. So Thermo Fisher is the only giant who will be getting that money from big pharma. So that's why, because I know a part of the inner working of this, Thermo Fisher is a no-brainer for me. So I added on, and it has gone up 22%. United Health is not a big position, but yeah, I added on a bit, but not a lot of money, because I actually have a quite a lot position in my US healthcare ETF. So that's where United Health is one of the top three. United Health and Eli Lilly, these are the top three positions. So I've not added a little bit money there. It has not given a run up yet. A lot of people are waiting for United Health to give a run up. A lot of people have invested money. So Rubrik is another tech player, similar to the data and all the stuff. So small position. I was hoping I'll give a quick run up, 12%. I'll book the money. It's not a lot of money, so I just kept that. Next is CrowdStrike. I'll just position the camera. CrowdStrike has gone up 35%, but CrowdStrike was not a big position in my portfolio. So I hope I have added a bit more. So I just stay in the position. So CrowdStrike is again part of the data thing, IT theme. It's already part of the Nasdaq, so I have CrowdStrike in there, but I bought in a good position, so got like, but it's a small amount of money. It's not a big deal, so it's not going to have a lot of effect on my actual returns. Okay, I might just sell it because it's a small position. Either I might add more of it, but I'll just book the profit and rotate to a different one. Okay, so that's CrowdStrike, and I think the last one is Transmedic, which I only added last week. Transmedic, they took a dive just before their results come out. Again, I'm going to build more on it, but again, these are all part of my healthcare portfolio. So don't want to spend a lot of money on healthcare thing. Maybe some positions, and I'll sell them if they go up by maybe 10-15%. I'll go sell them and rotate the money to some other sectors. So that's, and the other one, the only one which you can't see here is Netflix, which again I bought only last week. Netflix, out of again the big tech stocks, Netflix is probably one which has not participated in that huge rally unlike the other ones. So, and they're making good money, so their revenue is going up, and they're almost now a monopoly. Like every household, they have Netflix, so it's going to be a big player in that, in this space. next 10 years Netflix will probably become a monopoly. So I'll be adding some more Netflix over the next 4 weeks. So yeah, that's all I have as of now, and I will be selling some of them. Google, I just want to keep holding it, don't want to sell it. um, because the thing is, if I sell it, then where am I going to invest that money? Because these are the big players in the AI space. Okay, so Dipankar is asking bet and ISA. So bet and ISA is, for example, just to keep it simple. So these are all GIA. So if I want to keep holding it, it's fine. So there is no harm in it. But if I want to just get all the money within my ISA, just to make sure that I don't have to pay capital gains tax, so this is something people do, that you sell everything and buy it next day within an ISA. So I don't need to worry about capital gains tax, because by April I don't think I'll cross my capital gains tax limit just from this portfolio. And this is the only GIA I have. I don't have any other GIA. So and in case I have some other Bitcoin, but I don't think I'll be selling Bitcoin. So I'll just keep the Bitcoin in GIA. I won't book any profit. But the stocks I can just sell and put it in my ISA, because if I take, like, it is 5 grand now, so let's say it will be like 6 grand, whatever. So I'll just put the 6 grand within my ISA. But then the problem is that again throughout the year I will fill up my ISA within maybe few months, and then the rest of the money again will go to a GIA. So if you just want to simplify things, you can do that. A lot of people do that. So that's why this term bed and ISA has come into existence, because a lot of people do that. So but I mean, there is no reason that you have to do it. You can keep it, you can just keep your GIA growing, and then when you want to book your profit, just book enough profit to stay within the capital gains tax limit. So that's the whole idea. How does one can save office pension to SIP? So okay, office pension means a workplace pension. So there are two things that depends on your employer. So I mean, I'll give you some brief things. So workplace pension is better than SIP. I mean, this is a very general statement. It depends on your workplace pension, but roughly most employer will add uh, some money to your, some contribution to your pension. So in SIP, you don't get any employer contribution, unless, I mean, there are certain employer which can give you a bit of money in the SIP. It depends on entirely on your own workplace pension. So if you, so best thing is usually workplace pension is better than SIP if you want to save. Uh, so so the best person to contact will be your own employer's pension department. So they are going to advise you what is the best. If they are not willing to pay any extra money to your additional workplace pension contribution, in that case SIP is fine. And some workplace pension department can actually set up SIP, so you can contribute to SIP as a salary sacrifice. So the idea is that as your other workplace pension gets deducted, they will send some money to SIP as well. So best is talk to your pensions department and ask them that you want to do some additional contribution. So one option is they will allow additional voluntary contribution within your pension. That's one option. If they say no, we won't allow additional to our pension, then they will be able to set up, they will advise you what's the best way to go for a SIP. So you can do that, you can do both. But workplace pension, in a way, generally they are better than SIP because you get employer contribution on that. Thank you, Bharat. So I'm glad you find help from my videos. How to choose fund and stock between pension and ISA? I mean, see, pension or SIP and ISA, the tax treatment and when you get the money out, those are different. But the portfolio is same. Like my ISA portfolio and my SIP portfolio, I use the same knowledge to build them. So if you know how to choose a portfolio for ISA, you can basically copy the same portfolio and do it in SIP. I mean, the way I do it is, see, SIP money is locked for. So I'm going to be 40 next year. So 58. So let's assume 60 year when we are going to get 60 years old, I'll probably get the money. So my money is locked for 18 to 20 years. So there is no point me going and investing uh, too much of my knowledge and brain and everything into a SIP portfolio, because the money is locked for 20 years. Like, what's the point of me spending too much of my time trying to beat the market for 20 years? Because 90% of professional fund managers can't beat the market over 10 to 20 years. So why should I spend my money and my time and my energy in trying to beat the market for 20 years? So what I do is I buy a all world fund. So simple, like I buy the whole world economy, cheap, 0.14% fee. I just buy a all world fund, and buy a technology fund. So these are the two things. 20 years from now, uh, technology will still be a dominant force, and those companies are still going to make money. So I have a technology ETF and I have a all world ETF. So whichever happens, so if technology falls, at least the all world ETF will still be making money, because the world economy is going to grow bigger in 20 years. How, we don't know. Which company, again, we don't know, but at least it's going to grow bigger. So that's all I do. Like, I just have a regular investment every month, goes to my SIP portfolio. So I don't change, I don't sell anything, it just goes there. After 20 years, I'll see what happens. uh okay. Overlap is going to happen. The thing is, ISA and pension, they you will be probably taking the money out at two different times. Chances are, because pension is usually, it will be your retirement money. Now ISA, if you want to keep for 20 years, no problem, you can do that, and ideally you should do that, because if you invest for long term, that's where you're going to get the money. But overlap is going to happen. See, the S&P 500, 40% of S&P 500 is just the Magnificent Seven. So if you if you avoid Magnificent Seven and you invest for next 10 years, 20 years, that's going to be a very brave decision to do, because in that case you are actually betting against the best companies in the world, which have the maximum market cap. So whatever portfolio you hold, pension, no pension, nothing, whatever, ISA, you will end up holding a significant position of Magnificent Seven, unless you want to do something very fancy and um, take the risk of avoiding the AI players altogether. I mean, if you can do that, you have the confidence, go ahead and do it. But there will be correlation, there will be overlap, no matter which portfolio you do. So selling a stock, Dipankar is asking, selling a stock. So my idea, I will only sell a stock when I know that I have got a good return from it. So as I say, I want to beat the S&P 500. So if I can get anything over 15%, then I'm happy with it. And the other thing is, I need to know what I'm going to do with the money. So selling is fine, but if I sell the money, then the money comes. I don't want to just sit on that money, because I have cash position in different place. I have a cash account separately. So these are stocks account. I want to stay invested. So if, for example, Google has given me 50%, it's fine if I sell it, but will I be able to get Google at a better price in future? That's another one question to ask. And number two is, what is another opportunity that would give me another 30% over the next 6 months? So if I have these answers, I will sell it. But otherwise, or something bad happens with the stock. So like people say, the company starts some kind of, maybe some legal trouble or whatever. So if the sentiment turns and all, so that's the position I'll sell, because I don't need this money. I'm not going to, so this investment money, I have no plan to spend this money in next 5 to 10 years. So I'm not going to take this money out anyway. I have to stay invested. So if I have a better company to invest, which will give me more money, I will sell. Or if I see that there is some, the investment thesis for the company is changing, that some negative sentiment has come, some negative report has come, but it needs to be a massive one, not like some people, like for a company like Meta, if people say they have a 1 billion some legal penalty or something, 1 billion for Meta is nothing. So that's not a negative news for me. So in that case, I won't sell, but something really bad must happen. In that case, I might sell. But still, I'm not very sure about selling, because I'm building position at the moment, so my main focus is how to build position. The selling bit, I'm not decided yet, but these are the main things. Something bad, some bad news comes for the company, I have a better opportunity elsewhere, or the company has given me a good return. So these are the broadly the main things. But as of now, here, the only thing I sold in this entire portfolio is AMD. That's the only thing I have sold. Apart from that, I've not sold anything. Fundamentals of Pfizer be compared to investing for the medium term. So Pfizer, I hold Pfizer because I have a US S&P 500 tech ETF. Sorry, not a tech, healthcare ETF, and Pfizer is one of the big players in that. But medium term, I won't be going for another healthcare, particularly pharma. If pharma, Novo Nordisk, Eli Lilly, these are probably the only company I'll go. I won't go to anything else apart from this. So basically the investment analysis, I'll give you this thing. So if you want to analyze a company, so the way I do it, see, I don't know about the trading charts and all, so I don't have any knowledge about that. So the way I do it is I use AI. So for example, whichever app you are on, if you take a screenshot, but actually if you are on Lightyear gives you a lot of information on the app itself. So you can see buy sell information. If you scroll down on the page, it gives you analyst rating, so you know what the analyst experts are thinking. It gives you the price target. It gives you a very good analysis, what the bulls are saying, what the bears are saying. So it gives you both the position, like people who are very bullish about the stocks, it will give you all the information about it. The people who are bearish about the stock, it will give you the information about it. And if you also, it gives you financial performance, it gives you cash flow. Now I don't understand all those cash flow and all those metrics. What I do is I take a screenshot, put it to chat gpt, and you just ask that, do you think the company is making money? So this is how I use it, because I don't have all the technical knowledge. I just use chat gpt to answer all my queries. So but the Lightyear app, it gives you a very good detailed analysis on the stock page, earning per share, EPS, earning performance, earnings call, or even the recording of the earnings call. They are available in this Lightyear app. So it's, and also the news, the usual news that comes up for the stock, they are available. So this app is really nice. Like if you don't have any platform, then you can consider Lightyear for this. All my links are in the description box. I mean, but if you have training 212 is fine. I mean, you'll get all the information anyway. So these are really nice because nowadays you can use AI. The reason I didn't do stock investing was I didn't have all the technical knowledge about cash flow and accounting and EBITDA, all these things. But nowadays it's not a problem. You can just take a screenshot, put it in chat gpt, and it will give you, just give them a prompt that you are a stock analyst with 10 years of experience, and these are the accounting statement, and tell me how is the financial health of this company, and you'll get all the answers. So the knowledge, which was something that would be stopping me from going out and investing in individual stock, now knowledge is not an issue anymore, because if you have chat gpt, you can, knowledge is not something that will stop you. So all you need to do is use some common sense, make some decision based on the information that is available. If you can't understand anything, take a screenshot, put it to chat gpt, ask that what is the financial looking like. If you don't have to interpret everything, you don't have to analyze what is the price target, what is this, what is the income statement like, what is the balance sheet like. You don't need to, I don't understand any of it. What I do is I just take a screenshot, and rather there are dedicated AI websites now that gives you all this information. Because to me, all I understand for a stock, that it should be a company that is making money. Its price should not be very high from the projections. Like when you have the curve which is just going up and up, I won't buy at the peak. So that's all I understand, that if it is peak, don't want to buy there. If there is a sharp correction, that's when I will make most of my money. So that's what I want to buy. But if you are a trader, you will need a lot of information. Now I don't understand all of it, but if you really want to understand, if you want to do trading, you need to learn that. Now I don't do trading, so I don't need to know all those detail and all those charts like 200-day moving average and 50-day moving average, all of those, because I don't go into the short term mindset. Now, all I need to know as a long term investor is a company should be making money, the price should be in a good range, not sitting at the peak, and there shouldn't be any too much of a debt. So the company should be making money. So as long as making money, is sitting on a good money, or even if it doesn't have a lot of savings, but it is investing the money, like the Magnificent Seven is doing, that they are investing crazy amounts of money and they have a plans to grow their income and profit. As long as you see these basic things, that's all I need as an investor. I don't need to understand their balance sheet. I can just take a screenshot, put it to chat gpt, it will tell me what that means. So I don't understand most of it, but this is the basic things. But so there are websites which gives you this exact information, and they're trained to analyze your stocks and your portfolio. So this week's video I'm doing for a company called investing.com. So it has a pro feature, it's a free feature as well, you can go and check the website. So so they have a custom chat gpt kind of thing called Warren AI. There you can ask questions about a stock, and anything you want to ask, you don't need to be a technical expert, it will tell you, it will analyze all the stocks, it will give you the information in plain English. Then all the valuation bit that people do, again, you don't need, if you want to learn you can learn, but I mean it's not needed anymore, because if you use this kind of software, it will give you all the valuation, their cash flow statement in plain English, like it's without using any of the technical terms, you'll get this. And also the price targets, because the traders have a lot of way of deciding the price, how is the moving average and all. If you want to learn, again you can learn, but you don't need to, because people like me, without any of the technical skills, we use AI and we go and invest with enough information. I don't have 100% of information, but as long as I have 80% of information, that's good enough for me to make decisions about my money. Okay, stock chart. So Bhaskar is asking duration of stock chart. So you best to do monthly, but overall the pattern is important. But as I say, when you look at this kind of specific softwares, they analyze the whole thing. So for a long-term investment, 200-day moving average is what most people will prefer. So 200-day means a bit around, I mean, less than 1 year, but it's more than few months. So that's what 200-day moving average is, what most investors prefer to make decisions about whether to buy near the lower end of the spectrum. So China is very tricky, because see, China, the problem is China's economy and China's stock market, they don't correlate. That's why in last 20 years, China became kind of a major world power in last 20 years, but their stock market has not moved. Hardly it has moved before. If you forget about 2025 till 2024 end, Chinese stock market didn't do anything. But China's economy has been such a massive success. Now, it's very difficult to correlate how their economy is very good, but will that come to the stock market? Nobody knows. So a few things have happened, because the government is now pushing people to go and invest. So that is probably the reason this year the tech stocks have given a very good rally. But tariff tariff issue is sorted. I don't think tariff will cause any major trouble, because we already had a big market correction for tariff back in April. Now, for the same reason, tariff, market are not going to have a big correction. Maybe it will go up 2 to 5% here and there. And now Trump is saying that he's happy with China, and so things might just settle down. But tariff will probably not be the next big reason to move the market, because it has already given one major crash back in April, and people like us are making a lot of money because of that. So I don't think tariff will cause much issue now in future. uh, it- but China have given a good rally. I don't have China, but I have the global ETF, and the global ETF will gain from anything. So if the emerging markets do really well, the global ETF will go up. So that's how I make money. But I don't have any specific China position, but I might add some more emerging market position. I've already added India last month, so I'll probably add India or emerging markets separately within my general accounts. Yeah, TradingView is similar. So investing.com is similar to TradingView. TradingView also gives you a screener, numbers. I don't know whether it has AI. I've never used TradingView myself. So investing.com, what it does is it is similar. It gives you all the data, all the trading data and everything like TradingView. But what it the advantage is it has a custom built chat GPT kind of thing called Warren AI, so named after Warren Buffett. So if you ask it in like what is the good price to buy this stock, it will scour the market based on the latest data. It's not going to look into a 2-year old data. It's going to look at the latest data, and it will do an analysis. It will tell you that is it a good price to buy. So that's what I use. And um, also there is a feature called portfolio copying. So basically what it does is they will give you a portfolio every month. It gets updated every month. So today is second. I think they have already given it yesterday. So first or second of every month they will give you a portfolio, and that portfolio has beaten S&P 500 massively. It has given like almost 40% plus return in last 12 months. So if you don't want to do anything and you just want to copy it, that's one way of doing it. If you want to be a bit more hands on, then the stocks that you want, for example, you want to buy Nvidia, you go there, and you ask what an AI that is, what about Nvidia? How is the stock price now? Is it correlating with the earnings? So you ask the simple questions without any technical knowledge. It will analyze everything. It will give you an answer, and because it is trained specifically on this purpose, it doesn't do anything else. It's trained by this investing.com company in only for this purpose, for investment purpose. So you can trust some of the data. Of course it will say that you can't trust, but it's quite helpful other way. So undervalued stock. So Dipankar is asking, how do you get buying signal about undervalued stock with good potential? So yeah, stock screener, that's what I'm saying. Investing.com, you can go to the website. So it has a paid plan and a free plan. uh, if you go for the free plan at the moment, so this week Tuesday I'm going to do a video for them. So they are giving a very good discount code for Black Friday. So it will cost you like £8 a month for their pro plan, which is the paid plan. So in that they are going to give you, one is their portfolio. So they have a they have various theme. So if you want to do tech, there is a tech titan portfolio. So in that portfolio, every month they are going to tell you these are the stocks to buy, these are the stocks to sell, and you just follow them. You don't need to do any research, you just follow them. That's one way of doing it. All the performance and everything you will find on the website. The other thing is, if you want to buy your stock, like let's say Copart, first you need to know the valuation. Now if I don't know how to interpret all the data, what I'll go is I'll ask one an AI, I want to buy Copart. Is Copart has a good valuation in on November 2nd 2025? Is the valuation of Copart good enough for me to go and buy? So this is all I'm going to ask. It will do the analysis. It will tell me, yeah, it's good to, you can buy, or is it overvalued? So valuation, I don't need to analyze. I don't know how to analyze, first thing. And number two is I don't need to analyze because I can use this AI tools. It will give me the valuation. Similarly, if I want to analyze the momentum of a stock, then I don't need to do all the calculation and all the analysis. I'm just going to ask this Warren AI that is there momentum with the stock? It will tell me whether there is yes or no. Similarly, there are lots of portfolio. For example, if I want to copy Warren Buffett's portfolio, I can just go into this. The whole portfolio is there. I can copy it. All I need to do is I won't be able to invest in that website. I just need to bring them to my trading 212 or to a Lightyear and just copy and paste it there. and you can just follow it along. As Warren Buffett will make any change, you will know, and you just change it accordingly. So that's one way of doing it. So all the portfolios are there: dividend king, then value stocks, whatever you want to do. There are set portfolio there. All you need to do is to copy them and put them here. It gets updated because the company, as a part of the pro plan, they will update everything, and you do that. So it costs you less than £10 a month, and they're giving 50% discount from 5th of November. So I'll publish my video. You can keep an eye out for it. But you can go and check out the free feature today. So investing.com is the name to remember. Okay, so I think we answered all the questions. Okay, so if there is nothing else, then I'll close the session. Thank you all for joining. If you're new here, then please do subscribe to the channel, and we can do a few more of the live in future. If and please do let me know if you Pile just joined. Okay, Invest Engine Bhaskar doesn't have Indian stocks. Invest Engine doesn't have any stocks. So the best, if you want to buy Indian stocks, it will be the FRIN, or a few other Indian ETFs are available on Invest Engine. So you just have to buy the ETFs. But stocks, as I said at the beginning of today's session, that Lightyear, you can find few blue chip Indian stocks. I mean, not the whole of Nifty 50, very selected stocks you can find on Lightyear. So Payal, this is the YouTube live that we are doing. So everything is recorded. It will stay on my channel. I think it won't be available right now because YouTube do a bit of processing. But once, I think by tomorrow, it will be available on the live section of the channel, not on the video section, and you'll be able to see this. Okay, okay. By then, thank you for joining. Please do subscribe to the channel if you're new here, and we can do few more of these sessions in future. Thank you.